Hello guys, what's up? Today I want to share with you a really simple playbook that I'm using basically every single day to make money. I like to place two significant levels, the previous day high and the previous day low. And I say level, not line. I use the 15-minute chart for that. I use the rectangle tool, I take the high of previous day, and I will draw an area from this high of previous day to the next body candle. Okay, so this is previous day high. I do the same with previous day low. Then I'm going back to my usual time frame, which is the 5 minutes. Obviously, during the day, I will use multiple time frames: the daily, the 1 hour, the 15 minutes, even the 2 minutes, sometimes the 1 minute for my entries. But usually, I'm using mainly the 5 minutes. Okay, so now let's see what happens. The day starts, and we see that in the first minutes, it's really choppy. It's going up, it's going down, up, down, up, down. It looks like a symmetrical triangle. It shows uncertainty at this point in time. It can go either way, up or down. I prefer to stay on the sideline, be patient, and wait. So now we see that the price is really close to our significant level. That's when it starts to be really interesting. That's where I will pay the most attention, because here you have two scenarios. Either it bounces, either it breaks through this level. Today, the topic of this video is a bounce. In a later video, we'll talk about what to do when it breaks. So here we go, we bounced from this significant level, and if we place a descending trend line, we see that we have a breakout of this descending trend line. Okay? So here we have a descending wedge, and we start to having several signals: the bounce, the breakout, and the price is above the 20 EMAs. On my chart, I like to have three exponential moving averages: the 20, the 50, and the 200. So here I have three signals. How do I enter this trade? I will place a stop order above, because we see that here we have a pullback. Okay, so at this point in time, nothing is certain yet, and we might retest again this level like we did here. See, here we bounced, but then we retested, and actually we retested twice before going up. Okay, so that's why you want to be safe and place your stop entry just above to catch this mini pullback and a continuation, which is not 100% sure at this point in time. Then where do you place your stop loss? If you are aggressive and if you want to have a decent size position, I would recommend to place the stop loss just below the 20 EMA. Again, here we are not in the trade yet. We would be in the trade only if the price goes up. So this is a reasonable stop loss. If you really want to be safe, but if you do so, you have to have less size in your position, it's to place your stop loss below the significant level. Because, like I said, we might see another retest of this significant level, okay? So here you would be really safe. But again, with my experience, I like to place my stop loss just below the 20 EMA for an entry price right there. And now in terms of targets, I will have two targets. The first target is at the 200 EMA, because the 200 EMA, it's another significant level that I like to track, and oftentimes there is something happening at this level. For instance, here we broke out, we retested, we went up, but some other time we would like simply bounce of it. So I would take 50% here, and it's already a decent trade, 1.39 R, which is good. And my final target would be at this level, target number 2. Okay, we see that my stop entry has been executed right there. And now I am at my target number 1. I would take 50% off. Oftentimes, when you bounce from the previous day low and you have this type of setup, it's almost never straight up to this level. You have some sort of consolidation, okay? If you have this type of consolidation, you have probably 80% chance of a continuation. It's actually a bull flag. So you will have another opportunity to enter and to go up there. But possibly, you might have a rejection at the 200 EMA and you would go down. So that's why selling 50% makes sense. So let's see how it goes. Okay, so we see it's choppy. But here we have a descending trend line that has been broken out. We see that the 20 EMA crossed over the 50 EMA, which is usually really bullish. And we see that the 20 EMA is about to cross over the 200 EMA right there. So it's a lot of signal for me. And like I said, right there, you can have a second entry. You can enter at the breakout of the descending trend line and place your stop loss below the 50 EMA. We see that the 50 EMA acted as a significant level. We bounced twice from it. And here, clearly the target is the previous day high. So remember, we are in a trade right there. We still have 50% of our initial position. The target is the same. It's this area right there. So to be secure, I would place my target at the bottom of this area. And boom, we see that it went straight up. So it's a perfect bull flag. We have the first pole here, consolidation, little pullback, and boom, continuation to the next level. So here, you never know. So usually you sell another chunk, 50%, and you wait, but you start to be smart with your stop loss, meaning that at this stage, it's good to do a trading stop loss. You won't let your stop loss here. You would move it ideally to the low of the previous 5-minute candle. And again, when we test these areas, oftentimes it's at least 2 times. That's why you don't want to sell everything, because it will probably test a second time and maybe go through. Why not? And here we go. That's the end of the day. We couldn't break out of this significant level, but we had 2 really good trades, really textbook perfect. Descending wedge, bounce of the previous day low, breakout of the descending trend line, price above 20 EMA. And then we had a consolidation right there. We break the descending trend line, and this time all the EMA are in the perfect order. 20 is above 50. Everything is about to break the 200 EMA. Perfect bull flag, continuation up to the next significant level. So it's a really simple playbook, simple rules. You need to be patient. You need to have at least 2 signals. You enter your trades and you trust the odds. Hope this video was helpful to you. Thanks for watching and see you in the next one.